The broadcast is now starting. All attendees are in listen-only mode.
All right, guys, can you hear me? Can you hear me well? Open up the question box. Let me see, where are the question box? Here they are. All right. Yes, yes, yes. All right, I'm having trouble here logging in. All right, here we go. Now I can see. All right, so welcome everybody. Once again, press number 5 if you can hear me with no problems. All right. Awesome. Yes, I got a lot of people. All right. Thank you. All right, guys, once again, welcome to the webinar. This is kind of the follow through. If you actually were able to follow the earlier version of how to create and execute a consistent trading winning plan, to our webinar that I did, is just kind of the most in-depth webinar that I did. If you did, press number 7, so I know pretty much that you guys are being following through. If you did, that means that this is a continuation. What I'm going to share with you is a little bit of my background in less than 1 minute, but I want to share with you in terms of who I learned from and why I've been able to find a consistency, find consistency in my trading, right? Most importantly, I've decided to become a very profitable forecast trader, and then I apply certain techniques on that parameter in order for me to maintain a consistent winning streak on every trade that we take, right? So let's get started. All right, Stephen has, no, Michael says no sound. Hopefully they're able to get on it. All right, so this is going to be recorded just in case. So I just want to go ahead and start off with and kick off here with, yeah, there's going to be a recording through it. All right, so let's get started. My promise to you is I will show you the success formula of becoming consistent, profitable trader, right? Before that, by no means, I'm not a political or religion-based person in this presentation, but I just want to make some assumptions and pointers here that it will pretty much open up, hopefully, your thought process as it did to me when it was explained to me, right? So I'm trying to emulate what my mentors did with me, and that way you're going to have it open-minded to assume the information, right? Starting off with know thyself. From Wikipedia, know thyself is a great version of knowledge that says that it applies to those who boost and exceed what they are, right? Know thyself is warning. It's kind of a way for you to say, warning, do not pay attention for the opinion of the multitude. In other words, when it was explained to me, what it means that you have to come up with your assumptions, your own criteria of information. Do not rely on other people's opinion, right? And because that way, most likely, when you follow the herd, you're typically in the wrong direction. Does that make sense? Right? So that goes in sync with knowledge. What is knowledge based on Wikipedia? Knowledge is the familiarity, awareness, or understanding of someone or something, such as facts, information, descriptions, or skills, which is acquired through experience and education by perceiving and discovering and learning. So the whole topic today for you is that what I'm going to share with you is valuable information that will help you increase your trading based through knowledge. So basically, the more you know, the more knowledge you have, and the best position you have against the other trader. Remember, when we're investing, someone is right, somebody is wrong. If we make money today, somebody actually made that money from us, and vice versa. We need to make sure that we have all the information in our disposal in order to increase our knowledge and take action upon it, so we're on the right side of the trend, right? This was says by James Madison: knowledge will forever govern ignorance, and people who mean to be their own governor most arm themselves with power which knowledge gives. Benjamin Franklin mentioned, as an investment in knowledge pays the best interest, right? And recently, John F. Kennedy mentioned also, in a time of turbulence and change, it is more true than ever that knowledge is power. So basically today, all you have to know and understand, whatever you do, knowledge is power. But here's the thing, knowledge is power, but it's also a false belief unless knowledge is a potential power, and it becomes only power when and if it is organized into definite plans of action and directed to a definite end. That was said by Napoleon Hill. And also, Tony Robbins says knowledge is not power. Knowing is a concept of only potential value. The execution of it is where your power lies, right? So what I want to share with you is that what I'm going to try to impart on you today is how to create a certain rules of engagement, where to acquire certain information, and using in a very systematic approach that when you combine it and act upon it, you have an immense amount of opportunity on being very consistent in your decision making, hence giving you the power that that knowledge will bring to you. Does that make sense so far? Yes? All right, so let's get on with this. The first thing is that if you stay until the end, if you stay until the end, for the first time, I'm going to be uncovering one of our private clients' real account, where we are going to be showing you snapshots of the consistency. That's the key. Do not pay attention of the volume or the amounts, where I'm going to explain later on about that, but it's the consistency per month, including losses, by the way. And this is only dedicating under an hour or less per day by following the specific information that I'll share with you today in this webinar. And in the same foundation, I'm going to also show to you how every day we were able to maintain a very consistent approach into trading that brings about anywhere from 18 to 20% per month for the last 19 straight months now that we applied on our trade room. All right, so it's pretty much the exact same thing, pretty similar consistency in numbers. So remember, we're not looking to shoot for the fences or having like big huge winnings. It's consistency. All right, it's about consistency. All right, and I'll share with you the exact trading rules that one of my most influential trading masters, one of the people that I follow the most and that has most influential in my trading, and I consider it a mentor on very indirect format, because although I have not been mentored by him, I was able to be mentored by one of his proteges. Okay, and I'll share that with you in a moment. All right. So basically, I'm going to be showing you the snapshots once again of the return of investment of one of our clients' accounts. And no, we do not trade other people's account. This is a private situation, but it's worth doing the snapshots so you can get the glimpse of an idea of a day-to-day action plan, and you're going to see the difference on it. All right. So All right, so a little bit about myself. All right, so this is myself and my family. This is all I do. I work from home, and this is what I live for. I don't know what your intentions are, but my intentions are in the world of trading is create wealth so I can provide for my family and myself at the end and for those who I care the most, right? And I love the freedom that trading brings in. So you can see here, here's my kid when we surprise him with a vacation on Disney that we weren't able to afford before. And, you know, it was something that really changed our lives. So for me, guys, this is all for it, right? It's having this opportunity and freedom to actually be able to fulfill not like big, huge dreams, but at least have quality with our family. That's who I am. This is me with a lot of friends skiing and a couple of trading students with us as well. And this is me on the waiting between planes trading for a very small Surface Pro, Microsoft Surface Pro laptop right there, very small. Actually, we were on the trade room right there that day. It was awesome. So, but it's not only for me, it's about legacy. All right, here's my 3-year-old. He's 5 years old now, but that day is his first day of trading where he actually sneak out where he was just, you know, we were just hanging around in the house and he was missing. And when we came back, he was placing a trade, unfortunately, on a real account. I lost 375 bucks, I think, 350 to 375 that day. But that was something that I will never forget. So I had to take the picture, although it hurts, but it was his first trade. I would have loved it would have been a positive trade, but no, it wasn't. Now, on the other hand, we got Andres. He's 11 years old now. He's on his beginning stages of learning. Um, Now, I'm doing this and I'm showing you this is because this is the foundation of a successful trader. If indeed my kids decide that this is what they want to do in their lives, I want to make sure that I leave a legacy, right, of providing them with the information and the knowledge that I acquired through the years with a lot of sweat, tear, and dedication, and hopefully they can put it at work into the future. Here's Andres following a specific list of checklists that I made for him, so it just become more easily for him to understand what to look for, and basically just waiting to go long into this position on oil. So he just basically holding there. He just glue it very, you know, honed in into waiting for the signal to go along, and this is a result of that trade on 2 small contracts right there. That was very nice, right? So that cost me a couple bucks, as I promised, a couple of Xbox games afterwards, but it worked out for him. So, but obviously he just was on my shadows following the specific rules of engagements. So it all started for me on 1998, all right? When I read the Cash Flow Quadrant. Anybody actually read this book? Yes or no? Has anybody read the Cash Flow Quadrant? All right, here's the thing. This is the nutshell. I'm not going to give you a lecture on this. Basically, you are either an employee or working for the money, or on the right side, the money is working for you. That's it, plain and simple. So basically, it's a 4-quadrant aspect. You start as an employee, you start a small business, and you start making more money, but you're still working hard for the money. It's just when you start delegating your business to somebody else, yeah, you could take time off, and the money, right, start working for you, and then you get certain percentage of that money and put it on the investor side of it, right? And then the money start multiplying itself without being there and producing more. And producing more while you just take a little time off of, you know, growing your business or growing your net worth and so on and so forth. Okay. So, and in terms of the information, the only thing that I found out that it was very valuable for me is the fact that I needed to focus myself in becoming a business owner and investor. All right, that's the whole key point here, right? Well, if you want to read it, that's fine, but it just makes sense if you have a business and have someone else building the business for you, right? Immediately have the business produce income for you so you can take some percentage of that business and start investing in real estate, stock market, bonds, and so on and so forth. All right. I started all the other way around. So I said, you know what? I really like this fact of having the business and probably become an investor. So I started digging in. I started to find out what would be the best choice for me if I wanted to work for something. I really was, attracting to the trading. And it wasn't until I met this very successful hedge fund manager, a very young age of 18 years old, and he says, and mentioned me through the process of the flight that we were on a flight, and he says, you could be very good at trading, so you should consider seriously a position as a trader. So I started digging in, and I found this very interesting chart here where the highest paid salary was on security trader, right? They were making an average of 113 to 491, the highest as an employee. Isn't that interesting? As an employee. So that right there in there, I noticed that was the right decision to make. That was awesome. All right, so as you can see, even as an employee, this was my thought process. Even as an employee, it was the highest paid salary. So I said to myself, you know what? That guy might be right. Trading might be a way to go. So I kept digging in. I went into looking for the billionaire, the list of billionaires on the Forbes magazine. I think every year they launch, or every 2 years they launch one. So in this one, I just started to dig in. All right, who of these guys are actually billionaires on this industry? So I started to pile up a list of actual billionaires. So most of the other guys, they were okay in their industry, but there are a few of them. And then I said, oh my God. So I got Ray Dalio here, is a hedge fund in the United States, net worth of 10 billion, and so on and so forth. The list keeps going on and on and on. George Soros, many people know that. Ken Griffin, very good trader, by the way. Paul Tudor Jones, you'll see this is a guy who actually changed the way that I approach the markets. And I just kept saying, oh, this is awesome. So, but as I kept digging in, more billionaires as from the markets, right? As trader, hedge fund managers kept popping up. And the list kept going on and on and on. So guess what? I made a decision. I made a decision that I understood one fact. These guys knew one thing. They needed to stay on the right side of the quadrant, and they made their knowledge of investing their business. That's how they build it. So basically, they acquire a specific skill, they hone it down, and that skill was valuable for other investors. So they build their hedge funds, and that becomes their business. That enhance, if you know the rules of the hedge fund managers, a percentage of the business, of the hedge fund, has to reinvest into the fund itself. So this is what all these people did, and they became billionaires. I'm not even going to count the millionaires. There's after that. So all I'm saying is, am I going to be able to reach that point? Hey, probably, if I focus myself and create a trading plan or create a business plan around my trading and just hold my skills towards it. But the most important thing is that I validated the fact that this is doable, this is possible, and everybody has the opportunity to pull in an immense amount of wealth, whether that being 100,000, 50,000, 100 million, it doesn't matter. It's doable if you know who to follow and what to do. So I made a decision, and the decision is that I started to invest in me. What I did, I went to training, courses, ebooks, trading systems, seminars, forums, indicators, but my trading really changed when I choose mentors. And I decided to focus only mentors. So I digged in. I called my broker. You have no idea what I did. I worked with American Airlines by the time, and I was able to jump in a plane. I went to Chicago, met the owners of Lakefront Futures, my first and still brokerage firm. They introduced me to other mentors in the area, other traders in the area, and long and behold, I was able to hone in the skills. I'm trying to get close as close as possible from any one of these guys. But it wasn't until I was able to connect with one of the proteges of Mr. Paul Tudor Jones. Now, Paul Tudor Jones, as of last year, is a founder of his own corporation and in the investment arena. So he's a very technical analyst, and he's worth 4.3 billions. His actual income is about 800 millions per year. And believe it or not, this guy is awesome, very down to earth, incredible. Although I was only able to talk to him 2 times in my lifespan from my trading, I was able to be coach, not literally mentor, but coach in a constant basis with one of his protege, making the incredible opportunity of being close to the foundation of his trading technique. So I decided to follow him every single time from those years on. So my dedication started to pay it off, and I decided to mimic what these big guys are doing, right? So basically, I chose a mentor. And this is one of his quotes that he says, the secret of being successful from a trading perspective is to have an indefatigable, I don't know how to pronounce that, indefatigable, an undying, quenchable. That's definitely what I am right now. I'm sorry for my pronunciation. But undying, unquenchable thirst. Now, guys, this is important. Do not, by all means, walk away from here thinking that this is going to be easy. You have to really like this. You have to really love this. You have to make it every single day the most important thing that you breathe. You got to reach a point where you can stop talking about it. You got to reach a point where you can keep trading even on demo accounts, and it feels like it is the real thing, right? So you have to really like it. And the benefit here is to have this unquenchable thirst for information and knowledge. Back to the main theme. Knowledge is power, but what you do with the knowledge is what makes the difference, okay? So my career started in 1998. I was featured in the Caribbean business while I was just teaching people on the art of technical analysis, specifically of a group of Santander Security stockbrokers. I was, for the first time, contracted to train them on how to do that, and that was awesome. Then after that, I went on and took my license 3 exam, right? Here it is. And I end up working on with, in 2002, in Chicago with Lakefront Futures, right? As a IB, an introductory broker. This is the opportunity that I had to actually then be able to find my mentors on the real arena, not on forums, not on all that stuff. So it really opened up my mind. So, and my career of success continue on, as in 2001, I was able to become part of the analyst group of a small hedge fund in Boca Raton, Miami, where we were overseeing their accounts, and we were trading the big S&P futures. So I was the analyst of it. So it was awesome. Honestly, it was really awesome. So that was my first taste of being part of a hedge fund. So as you can see, by following the lead of those who are really wanted to follow and mimic their success, I was able, by default, I was able to fulfill some of my dreams in those perspectives. In 2015, we won the Trader Titans Award by Dr. Dean Hantley's based on transparency, consistency, right? And his basis is that we were able to produce a consistent winning streak, including losses, right, at the end of the year based on 3 contracts. And you can probably find more if you Google Dr. Dean Hantley's information and how he came into the decision of giving us this prestigious award, which is pretty awesome. I humbled out by that. All right, but enough about that. Let's just get started about the training. It's about knowledge and how you can apply it in your trading decisions. So basically, I'm going to bring in here a little bit of an explanation. How do I go on and show you how you can acquire a specific decision-making and what skills you need to focus on in order to take your trading to the next level. All right. So the first thing you need to do is you need to be clear on what you're trading. All right. Do not jump from one account to the other. Do not jump from one instrument to another. All right. You have to make sure, hey, you know what? I'm going to be a specialist on the NASDAQ. I'm going to be a specialist on the pound yen. You know, I actually know an euro yen trader, euro yen trader. He doesn't trade anything else, into well over 7 figures a year. So that guy is awesome. But he's specialized exclusively on the euro yen. You got to be clear on what you're trading. So why don't you just type in right here if you want to share what are your specialty? Anybody? Let's see. All right, CL, crude, SPY, Euro CAD, Euro USD, ES, NQ. There you go, guys. All right, I got Wahid. He's on two markets. There you go. That's awesome. CL and ES, great. All right, we got Louis. He's going into CL, ES, NQ, GC. That's good. Louis, be specific. Which of the four do you like the most, Louis? You're saying that you're interested in oil, E-mini, and NASDAQ, gold. You got to be very specific. Which of those are the ones that you love the most? There you go, Louis. My suggestion, you become good at it. You only need one, the good one, to make an incredible living from it. ES and CL, TF, and GC secondly for Larry. There you go, ES and then CL. Great job, guys. Great job. Now I can see you guys are very focused. I love it. Awesome. Bonds, there you go. I like to do 2 different pairs. I got a question that says, do you use only one pair of Forex? I like to go with the British pound, euro dollar, pound yen, euro yen. Those are the ones that I like. I do not trade them all at once. I only place trades on 1 or 2 that I feel has a highest probability of success in my trading, depending on the setups, depending on my strategy. Does that make sense? Sean, did that make sense? All right, awesome. So guys, you're on track. Let's just keep going on. Then now that you have the specifics, right? Now that you have the specifics, you move on into creating a specific trading plan based on the instrument you will be trading. Like, remember the last training? Guys, did you like the last training that I did on creating a specific trading plan? Where you're going to have a daily specific profit objective on trading? You see how all this start tying up together? Now you have a clear path of understanding, you know what, Carlos, I'm going to be very good at CL and ES, probably bonds. I'm going to stick with it. I'm going to learn everything of it. And that training that I did show you the way and how to become a very successful professional foundation kind of thing on that specific market. Now you have a plan on how to create a plan. And today you just chose the 1 or 2 good contracts or instrument you're going to be good at, right? Now we move into the trading strategy. How do you make sure that everything is boiled down into the specifics here? Let's just dive in here. Know your market. Be specific on your market intel. All right. I created a profile system on the way that I followed through. I showed most of this on the last training. If you haven't, just make sure to take a look at it. But basically, this is how it boils down, the most important things, okay? So here it is. The best time to trade exclusively, as an example, is a euro dollar in this case, and in the E-mini, I think I use as well. It would be like, all right, so I know for a fact that I could trade from 14 to 17 GMT time, 2 to 5 GMT time. There's a 4 or 5 hour difference, right, from the EST time. So basically it could be anywhere from 10 to 1 o'clock. Right, that would be the best scenario when I trade the euro yen, okay? I mean the euro dollar. I found out based on whatever the criteria is that I'm following through that produced the best results for me, right? That's all also depends on the news report, right? So I need to identify where the news report are coming on, what are the specific timetable of that news report, and be able to assess the fact of understanding how the market react towards those news report. So basically I can create a strategy after the news goes in or before the news goes in, depending on how or what type of trader you are, right? So this is the two most important thing is from the whole 24 hours block of time, which are the 2 hours that will provide you the best opportunity for us. Let's see if you can nail down here, if you've been following on CL, on oil, what are the 2 hour time tables, right? The 2 lifespan, right? Or 2 hour span that provides the most beneficial outcome on CL. Let's see. 9 to 11, 13 to 15, that's pretty much a GMT time, yes. 9 to 11, 9 to 11, 1 GMT time. There you go. You got it, guys. You got it. 9 to 12, a little bit more open than usual. I like to be done by 11 the most. There you go. You have an idea. There you go. So we already know that those are where the windows of opportunity, where the probability of success based on our strategy are maximized, are between those 2 time frames, right? Does that make sense? In my case, it's pretty much from 9 o'clock. I mean, I would say 9:50ish, mostly to 10:50, around that, to be very specific. All right. After you have that, then you move into the news report, right? So you need to understand how to tell if you should trade or not. As an example, you go to forexfactory.com. If you have more than 4 high impact report, it's going to be choppy. Take it from us. So I rather, if there's going to be 3 or 4 high impact reports in the 8 or 8:30, I typically give it at least 1 hour, 1.5 hours, and then come back and see what the market has done. Does that make sense? Does that make sense? Yes. A few examples of those more in-depth reports that we found fine-tuned that we should wait after them or don't trade at all would be consumer confidence. We wait after the report, period, wherever that time is. Any Fed report, we need to wait after the report, at least 15 minutes or 20 after that. FOMC meeting statements, wait after the report. OPEC meeting, do not trade on the whole day. It's crazy. OPEC meeting, this is one that I'm going to give away to you guys because it's just incredible. OPEC meetings, no trades. And I got way more to cover, but these are kind of ones that, as an example, that when we trade and see them, we know exactly what to do with them. Why? Why did we know about that? Because we sat down and went back in time and said, how did the market react when this report came out? Actually, this was Juan's job, by the way. So anyways, but it was awesome. I mean, he went back about 3 years. It took about 3 months to do this whole stuff. And we created our own criteria of what we can expect, right, from every report and just be able to understand, because you need to be in the forefront of the information of, hey, OPEC meetings today, we should not trade. You know what? We should not trade, but what's the range? All right, it's just probably 58 range. You know what? Maybe we can just drop down to a lower time frame if we see an opportunity between 9 o'clock and 10:50. We probably could take one trade. And you know what? Maybe instead of going for the targets, why don't we just go ahead and go with the ATR, the average to range, and so on and so forth. Does that start making sense, guys? Yes or no? All right. Yes, we do trade we now trade the crude oil inventories on Wednesdays, which is going to be tomorrow, by the way. All right. So what's the potential amount of movement? We taught this yesterday. I mean, not yesterday, on the last training, right? And the plan of action, ATR is the average to range. ADR is the average daily range. So we need to know those numbers, as I explained before, so you can make a right assumption on what to expect from the market. After we have the profile of the market, then you move into the precise trading methodology. I'm going to share with you here what for me works the best, right? And I have never deviated from this in years. The first thing is focus on the main trend, and that would be the key success. You can use price action, you can use long-term periods moving averages. That's something that we do as well, but mostly big swing price actions. The high, the important high, the important low is the most important thing on the trade. For those of you who have no idea what I'm talking about, assuming that the market moves up, moves down, moves up, moves down, moves up, and it's just like that, very awkward. What is the trend here? Well, the important thing, you start analyzing the market from right to left. That's the important high. It's coming from this low. This low didn't took the most previous low right here, which is the biggest move right here. This is an impulse move. So this is an upward move, making this an important high, and the market just took that high. This is an uptrend. So that means that I then use price action analysis to wait for the market to pull back down, so I can just have a high percentage of probability of buying after the market has collected some of the long positions into the pullback right here. That's a nutshell. That just gave you an idea. That's the key ingredient of using the focus of the main trend and using price action as an example, right? Then you can add up any other things. I don't like to use indicators and all that stuff, other than probably we have a moving averages and price action. Then we use a dynamic price action analysis, and that boils down into identifying important support and resistance. Guys, you want to learn something right now today, focus on learning support and resistance trading, and that immediately will give you a boost of 60% on your trading, right? It doesn't matter if you're scalping trading, swing trading, day trading, monthly trading, whatever that is, support and resistance is going to be the key of success to you. Then, as an example, right, you need to identify what are the important highs and low structure of the market, right? That's all you need to focus on, the important high, important low of the structure, right? The next thing you need to do is dynamic trend lines formation. Now, this is going to provide you, right? This is going to provide you triangle formations, which is a pattern of recognitions. It's an old school technique that works amazing on any time frame. They work, and they will help you identify the trend and will also help you predict potential movements. All right, so we teach that very in-depth on the pivot stack concept, but basically it's price action at its best. After that, you can even go ahead and jot down what we call the price symmetry, right, or pattern symmetry. It is a repeat behavioral movements on the past week, days, hour, minute, whatever the time frame you're doing. The market repeat itself over and over again, and you are very aware, if you find it, of what the market will most likely will do. As an example, the market comes down, comes up, comes down, comes up, comes down, comes up, comes down. This, let's just assume price action is to the downside. Every time that the market is doing a pullback, we can identify here most likely the pattern of repetition. Every time that they pull back, they pull back, they pull back, you have a certain amount of intended move, right? Intended move from the price action itself. So the market is telling you what their intentions really are. So you'll know, for instance, if the market pulls back up in here to this area and you say, oh my God, they just broke the prior high right here, I probably might consider this a buyer scenario, and you fail to see that the market previously has pulled to that much, and then you take the width of this movement and project it from this area, right? And you'll identify that the market most likely, yes, is passing through those levels, but they're reaching a potential resistance point just to come and go back again. So giving you kind of what we call the fake out move or stop loss hunt, right? Price action will help you identify if you learn how to read symmetry patterns on the movement itself. Once again, what is this? It's pure price action, okay? Right? So far so good, guys. Are you making it? Is this making sense, right? So far, every single market provides you. Every single market provides you the opportunity to identify the patterns. All you have to know is how to find it and then put it to practice and do the due diligence, right? Go back and just setting your trade plan and making the profile of your market. The next thing you can do that works pretty good is focus on simplicity on the Elliott wave patterns. Price action itself, right? Price action itself, it's amazing. 1, 2, 3, 4, 5. That's the Elliott wave patterns. 1, 2, 3, 4, 5. That's the Elliott wave patterns. I just did this randomly. Does this make it looks normal, right? This is a very typical price action activity based on Elliott wave. Wave 1, 2, 3, 4, and 5. All you need to do is just make sure to focus on simplicity. What is simplicity, Carlos? Understand that the biggest move starts at 1, at 3, and at 5 fifth waves. Understood? So you want to make sure that you can identify where the second wave is ending so you can position yourself anywhere in there and drive one of the longest swings of the Elliott wave. Or on the fifth, I will not tell you to get into the first wave because it's difficult to call a top and bottom. Guys, does that make sense? Yes or no? So far on the Elliott wave, it is clear enough. I mean, I'm teaching you the simplest way to do it. Do not overcomplicate it. Come on, do not overcomplicate this thing. The same thing applies to the downside. 1, 2, 3, 4, 5. All right, Carlos, I noticed that the market is sideways in the top. That's a fifth wave up. After a fifth wave up, I'm going to find some kind of a consolidating. Once they break through the consolidation, that will trigger possibly the first wave. Should I get in right there? Don't. Wait. Wait for the pullback, possibly from the break point, and that will translate into the next wave down. So basically, you have to be patient, meaning you already know the market is moving down. You have to wait until the market pulls back up, and you do the analysis, and you do your own thing. You can use price action, support, and resistance for that, and get yourself on the break of it to the downside. We typically do pivot step formation and go short when the break of the trend line goes in, and then try to ride the third wave down. Stay out. Wait for A, B, C corrective move, wait for the pivot step, wait for the break of it, go short, and ride the fifth wave down. Carlos, does that mean that I am only going to position myself in the third and the fifth? Yes. Why? Why are you going to do that? Why? Because it has a highest probability of percentage of being able to go with the impulse of the move towards the trend. So you're following the trend, check. You're going with the momentum of the trend, check, and you are getting on a rejection of a previous high that was left behind, right? That already your stop loss is going to be measured and calculated for you because price action and the price structure just tell you where the stop should be, meaning including a level of less risk because your stop loss is close enough in exchange for the next huge wave down. Guys, does that make sense so far? Awesome? Awesome, right? So focus on simplicity. Elliott wave works amazingly with price action. By now you can tell that I'm all about price action and confirmation price action and so on and so forth, isn't it? The next thing is use Fibonacci, all right? There is a gazillion Fibonacci's out there. All of them works, and I'm going to tell you how to identify the ones that are going to be the most profitable for you. And the most important thing is, it does not have to do with the actual Fibonacci's. Let me show you. As an example, you got huge arrays of Fibonacci numbers. This is just awesome. There's so many of them, right? But you know the golden mean of the Fibonacci ratio, which is a golden mean. Let's see. Who knows it? Make space here. Anybody care to share what's a golden mean? Let's see who knows about the Fibonacci's. There you go. That's a key. 61, right? Is it clear? 0.8. Let me do this better. 61.8%. That's the golden mean, right? Just stick with this, with what works. Now, here's a problem though. Here's a problem. The golden mean works like a charm, but it is also one of the most used, including the 50%, right? And the 38.2%. Does that make sense? These are the most powerful Fibonacci numbers that they're being used over and over again. Now the problem is that most traders use those for trading. And guess who knows about that? Market makers, right? Market makers, I'm sorry, not market makers, hedge fund traders. The market makers are the bank who execute for the hedge fund traders. The hedge fund managers, the smart money, those people are the one who knows that's the typical scenario. Although when the market comes down, Elliott wave patterns. So let's just say wave 1, 2, 3. I'm going to show you something very awesome here. The first thing you have to do, I just taught you about price symmetry. Just try to measure this in terms of points. And then you're going to measure from top to bottom and see how much that will, be recreated into the future, and that's going to be over here. You will find out that when you measure from here to here, the 68% is just right in here, the 78% over here, the 80-something% is over here, and keeps going on and on. The 32% or 33% is somewhere in here, and even the 25% is over here. Make sense? The 50% is just right in the middle, but you measure all of them. You measure all of them. The 100% over here, the 0% is around down here. You measure all of them, and based on what the market has done before, it's going to tell you which of these Fibonacci's are going to be the one who are going to be validated for you to fade against it. How does that work for you? Does that make more sense? Yes or no? Does this apply in opening up your eyes of understanding how to filter the Fibonacci's, right? Price action will validate which one most likely will be. So you have an idea. Does that mean that you're going to sell on the first retracing of a Fibonacci? No. Those numbers are as a gauge of an idea where you create multiple areas of most likely where the market can and possibly reverse and continue to the downside. That's the reason I do not trade the Fibonacci's numbers. I use them for confirmation though, but plain and simple, they are pretty much used as level of potential ideas where most likely I can expect the market to finish the move, right? So that's the secret that I use on the Fibonacci's, right? That's how I use them over and over again. So now that you have that, you have to create one rule. Use stop losses. Can you go, here's my rule, and here's a question that I have for you. I hope you can answer it. Can you go to sleep? And if you get stopped out on the amount of risk suggested by your team, by your system, right? It just said you have a sell setup or a buy setup, and your system stipulated stop loss, and probably you say, you know, I'm willing to risk $100, $500, $300, $150, it's $75. So based on your system, if and only if you can go to bed leaving the stop loss as it is and waking up onto a loser being stopped out, if you're okay with it, you go for it. Okay, you go for it. You plain and simple, you're well established in your trading. But if you say, no, my system says that I have to risk 700 bucks, or whatever, I mean 70 pips or 45 ticks, that's 450, that's crazy, I can do that. Well, that means you need to lower the amount of contracts or do not trade at all that day. That's my rule of engagement. If you can sustain your own losses, then you should not be trading at all. Market is not an ATM machine. It's never going to be. It will never turn like that, and it will never be happy with you at all times. You either lose money so somebody else will make it, or you make it and somebody else will lose it. But one thing doesn't change, at least on our side. We have a strict rule of stop loss placement, and I use price action for it. Pure price action. You see me doing over and over again. If you be following my work for all these years, that's how I played it out. All right. And last but not least, I have to create a plan of action, right? And this is once again the huge training that I did last time. As an example, this is how it looks on the E-mini S&P, right? My objective is to make about $2,500 per month, as an example, per contract for my trading activity, per month, per contract. So my trading plan looks something like that. Based on my risk tolerance, I will trade only one contract per $7,000. I will only trade from 9 a.m. to 12 p.m. I will follow my trade checklist with discipline. I will not trade if my parameters are not met by the rules of my system. So I follow my system by the tick, right? I will focus on my goal, which is to make 2 to 4 points a day on the E-mini S&P based on this specific instrument and based on the daily potential, right? And that's actually my personal financial objective. So basically go to 2 to 4 points and I'm done, right? That way I can reach my goal at the end of the month. And I will withdraw 70% of my monthly profits and leave the rest to grow my account for 12 months. Now, this is on a personal level. This is a trade plan that I actually built for one of my students. Does this make sense to you guys? Does this trade make sense? This trade plan make kind of sense for those of you trading the E-mini S&P, right? I will stop trading as soon as I reach my daily goal, shut down my computer, do something else with my life. So that way I can continue the growth to my account, right? And I'll stop trading if I reach 3 losing trades in a row. And this is his criteria. This is how much he's willing to lose based on the average stop loss that he has, right? Carlos, doesn't make any sense. I mean, he's going to lose 3 times in a row. And what if he loses 2 points and that means he's losing 6 to gain 2 to 4? Well, we don't know if he's going to lose them or not, but he's going to give it at least 3 times the shot. You see me doing this over and over again. If you follow your strict rules of engagement and you believe very good in your trade plan and your trade strategy is consistent enough, you can lose 3 times in a row, and the very next day you can recoup most of it, if not in the same day. All right, Emmanuel, that's his key. I have no idea. All right, that's what he wanted. Emmanuel asked me, why 7,000 per month? That's his dream income. What's your dream income? Write it down. What are you looking for from trading? Why don't you just write it down? I just want to see everybody here. Let's see. Anybody care to share? How much is your personal income that you look to gain from your trading? 20 grand per month? 10 grand, 5,000, 12,000. I got Alan 250 a day, 250 a day, 5K. There you go. 10,000, 8,000, 5,000, 10,000 is the key here. 10 grand, 5K. Yes, Don. Yes, you have to advocate the daily loss limits. Yes, indeed. 5K, 10K, 2 grand, 2 grand, 2 grand, 3 grand, 4 grand. There you go. Fred, I explained that in the training that I did last time, 2-hour training. Aaron says 35K. There you go. So you got your own criteria. So based on the numbers that you put in here is the amount of contracts that you're going to put in here. Of course, if you did the profiling. Once again, I suggest you to go and check that 2-hour training that I did. I went in and out on creating that trade plan. It was awesome. Based on that, you will know exactly how many contracts, how much money you need in your trading account, so you know how many contracts you're going to be able to trade in, and that will give you the outcome that you're going to be looking for per month. You drop down that by 20 trading days, and you already know how many points you need to make every single day in order to reach your outcome objective without risking any more on that than you should. Okay? Awesome, right? You guys are awesome. All right? So that's key ingredient. That's the key of success in your trading. You have to control your emotions, right? By creating a specific plan, understanding the fact that the system or the instrument that you're trading at will provide you that opportunity. You know that based on all the specifics of that market, that activity on a daily basis. And you got to be clear on the reason why you're trading. I personally, I'm trading not for income, I'm trading for growth, right? That's how we deal with it. Why? Because that's how I learned from it. So I have an income, a monthly income that I make my living from, but I mainly trade for growth. And I will show you specifics in a moment. All right? So how was that? Guys, you like it so far? You like the idea? Does this just give you the perspective? What do you need to focus? Do you understood the fact of price action? How does this price action is going to benefit you, and how you can use dynamic trend lines? You use triangle formation. How price action and symmetry help you identify which of the Fibonacci sequence you should be focusing on, right? You also understand how the Elliott wave pattern can tell you where the most upcoming next highest move, high probability move is about to happen, so you can position yourself accordingly with it and get the most out of the trade, right? That's pretty awesome. So back to the presentation. So here it is. I am going to show you, right, the next upcoming, as I promised you earlier today, the potential reverse psychology, right? And I said reverse psychology because sometimes we think I want to make this much X amount of dollars per month. Now I'm going to show you how I was able, by learning and acquiring certain knowledge, to see instead of a clear number, right? A clear value, 10,000, 20,000, that's irrelevant, guys. What you're looking for is a percentage of consistency per month. Does that make sense? And I'm going to show you in a moment, right? I'm going to show you in a moment. But first, let me ask you, right? By having that information, does so far you guys have learned how to tackle your market? NASDAQ, bond, CL, ES. I know there's a lot of people. 10,000 per month, yeah, 1,000 per day, 2,000, increasing to 5,000 per month. Another Charles says, all right, Charles says 35,000 per month, right? That's key ingredient. And I just taught you how to combining all this knowledge and all these different levels of expertise will help you tremendously. So my question to you is, how would you like me to help you take your trading to the next level? How would you like me to teach you step by step how to implement what you just learned, plus much more in any market, so you can start predicting the turn points with high accuracy and adapt with what I just taught you right there. I'm going to give you a template where everything lines up in a systematic approach. And if you do it right, you will bring consistency. All right? Remember, we must follow those who have achieved what we're looking for. As an example, here's Ray Dalio, right? If you don't know who Ray Dalio is a founder, right, of Bridgewater Associates. He's a hedge fund manager, right? He's worth $15.7 billion. And it says it is a law of nature that you must do difficult things to gain strength and power. As with working out, after a while, you make the connection between the difficult things, right, and the benefit you get from doing them, and you come to look forward of doing these difficult things. What I'm talking about is the stop losses, the hurdles, right? I call it the poor mentality because I was there of saying, Jesus, I can't put my stop loss there. It's just too much money. That means that you guys, we weren't at that point. I wasn't ready to trade. I didn't have enough capital. So my thought process says, and one of my mentors says, what if, Carlos, what if you would have 5 times more amount in your trading account? You're still trading the same amount of contracts. Would you be able to place the stop what it's supposed to be? And I would say, yeah, because that means that if I get stopped out, I still have enough left to recoup because I believe in my system. And then he says, you need to overcome that hurdle. So that means you're not ready to trade. You need to come up with more money in order to allow your system to tell you what the stop should be and shouldn't be. How many times many of you have placed a trade where you got stopped out, and then the market reversed and reached your targets? Anybody? Come on. Don't be shy. How many times you've been stopped out and you're still being right on the freaking market? Isn't that annoying? It's annoying. It eats me alive every time that I get stopped out because I was afraid, right? I was afraid of losing money and I was freaking right on the market. So it's a double loss, right? I got stopped out and I see the profits slipped away when I was right into the market. That's exactly what Ray Dalio was saying here, and I follow him a lot. All right? So remember, once again, we must follow those who have achieved what we're looking for. Now, here's a basic premise that Paul Tudor Jones says. It's very powerful. I love this one. I wanted to share with you. The basic premise of the system is that market move sharply when they move, right? If there is a sudden range expansion in a market that has been trading narrowly, right? It's sideways channel. Human nature, the most common human nature is to try and fade the price move. When you get a range expansion, the market is sending you a very loud, clear signal that the market is getting ready to move in the direction of the expansion, meaning breakout movements. So I explained to you about the triangle formation, channel formation. These guys use a lot of this techniques, but they have a certain additional knowledge that I was not aware of. They do not precisely enter at the break. They wait for the pullback. They use price action, support and resistance, Elliott wave activity to fine tune where most likely the burst, right? The breakout of the direction pretty much is going to take a breather and then continue on into the expansion into the upper side, right? So that's absolutely one of the most key ingredients that this guy create a profound effect on my trading. All right, so here's a sneak peek. By no means this means that this is a typical scenario that most of us are going to keep doing it. So far it's been working, and as long as we maintained our focus on our trade plan and execute every single day, and then most importantly, identify when we should be out of the market and do not trade. Don't be afraid to say I'm wrong. You know, I was wrong and that's it. Don't be afraid of it. And most importantly, don't be ashamed of saying I'm a chicken. I don't feel comfortable with the market today. I am not going to trade. I have done it. I'm not ashamed of it, and I'm extremely proud of it, because sometimes the best trade is when to stay out of the market. All right. I hope that really sinks into you guys, because nobody's wrong. All of you are caught up with the exact same opportunity of become very successful. And I'm going to try to explain to you how you can scale up your accounts into the millions, right? if you sit down and think rationally how to do it. It's not impossible, but it takes time. And the key ingredient is that this key right here, consistency, guys. So in this account, I'm just going to show the snapshots, right, for pretty fast. All right, here's one of our clients, right, and that was a $200 account. That's one day, right? Let me just that was the 5th, the 7th. We made about $100. The 10th, obviously, weekends off. 160, 270, 250, right? You can see it right here, 250. That was a hit. 100, 270, 310, 210, 350, 450. But take a closer look at this. Here's a key ingredient. I lost first 450, guys. All right, we lost 450. Do you think we're going to whine about it and go to the corner and cry? No. We said, you know what? Take a look at this. Let me show you profile. I'm going to show you the profile. Look where we lost money that day, crude oil. Look where we made money. Can you see where we made the money back? E-mini S&P. I was not ashamed of saying I was wrong. The market is not to be traded. Forget it. Let's just move on to the ES. But concentrate 100% our efforts and trading and analysis into the ES, and we were able to recoup it back. Isn't that a great lesson? Yes or no, guys? Right? Next day, that was 430 that day in a combination on the E-mini and the oil market. Okay? So here's another one. You want more proof? Now, this is a more recent one. This is the most recent one. This is a small account. It's a $5,000 account. It's a personal account that we're trading it. Very small. We're not looking to shoot for the fences here. We're looking to create a consistency. It's a real account. It's my account, but it's a personal. It's one of the small funds attached to a bigger one, and all we need is to create the concept of the consistency and see how much would that provide every single month at the end of the day. Now, small accounts, I mean small gains. Check it out. 20, 80, 230 here, 260 here, and this was January 8th, all right? So you can see 7th, 6th, understood, right? When was this was when? What is the date in this one? I don't see it. All right. Anyways, that started at 80 on the 6th, 20 on the 7th, 230. Market was good. January 260, good. 240, but we lost first. We lost first here on the 11th. 12, 10 bucks. We lost first. Recover 10 bucks. Market was crazy. Take a look. All the amount of countries that we did. Crazy. Call it a day. The 50 bucks on the 13th. 30 bucks. I lost first. All right. Now, what was the key ingredient right there? Hey, man, I cannot leave off of 80 bucks or 50 bucks. Are you crazy? I don't want to show you that. The key ingredient here is a consistency. So in 8 days, we're 900 bucks net, 18% return of investment. And this is a trade plan. We take only 1 to 2 good trades per day, 1 contract, focus on 15 to 20 ticks objective, that is if the market allows us to take it or not. Withdraw 30% of the net profits every single month, and we leave the 70% on. Compound the account every time that the market increases $5,000, we're going to trade 1 more contract. Our goal is to reach 10 contracts blocks, and after 10 contracts, modify the strategy to a 50% scale, meaning every time that the market provide us with a 50% increase of the amount of the account, we will increase another contract, right? And that's the key ingredient of our plan. This is our plan. So how does this look on a year? Hopefully that looks something like this. So basically at the end of the first month, we only should have made probably 630, and then we keep compounding. As I said, at the end of the 12th month, the account from 5,000 will be up 31,000. Okay, that's not enough. Is that good enough for you? I don't know if it's good enough for you, but for me, what I'm focusing on is inconsistency, and more importantly, my clients, my potential investors, because we're trying to pull in an energy fund, they need consistency. And guess what? They're looking for at least 7% per month. Am I providing so far in the last 8? And this doesn't include today's trade, by the way. Juan, you're there? How much we did today on this account?
Um, 1 second, let me check.
So far, this equals about 621%, if I'm not mistaken. Am I right, Juan?
Yep.
At the end of the year. At the end
Yeah,
of the
that's
year. Compounding, by the way. Compounding. Given the fact that there's going to be, this is assuming every month we're profitable. I'm not saying this is what we're going to be doing and this is what's going to provide. I don't know. I don't know about the markets. But so far, based on our results and the live trades that we're doing so far, the result so far is 18% return of investment per month, which is awesome. It's pretty much double what they were looking for, which is great as well. And we're not shooting for the fences here saying, hey, you know what, we're making gazillion bucks. No, because imagine this is trading only one contract, right here, one contract. Imagine this result when we're trading 10 contracts, right? When we're trading maybe 50 contracts, if we were able to pull our finances all the way through there. System doesn't change, return of investment doesn't change, the risk exposure doesn't change, parameters stay the same. Guys, is this making sense? Yes or no? Yes or no? And take a look at this. We're withdrawing 30%. We withdraw 30% of the net profit per month. We're not putting all the money back in. I'm treating this as what? Anybody remember at the beginning? I'm treating this small account as a hedge fund account, as the big guy's account. Capital growth, Charles, thank you. That's it. This is the key. So I'm not saying here, yeah, and I know probably you're saying, man, he's going to show me $1 million account. Can't. I mean, come on. I don't want to insult your intelligence, right? Because it's something that maybe you would like to hear, but I just want to show you something that you are able to pull off right now. Right now. Does that make sense? One key ingredient, by the way, the $5,000, the 5K that we started, it's full risk. If it's lost, it's completely lost. Right? If it's lost, guys, if it's lost, it's completely lost. Nobody's going to not be able to sleep. Everybody's going to be able to eat. No hard feelings for anybody. If we blew up the 5K, they're gone. But so far, absolutely good. All right? And that's the key ingredient that I want you to see and take close into your account, into your heart, because it's about growth and consistency, and still you're going to be able to get paid. That 30%. You can do your own, but this is the one that I'm sharing with you right now, live, real case, the way that we're looking for. So we're probably aiming to get this much at the end of the year. Let me just bring that up. How much is at the end of the year? 31K, right? Divided by 12. You look back and you were able to make 2,500 a month. My question to you by then is, hey, what 30 grand extra at the end of the year? How does that help you? We were not shooting for the fences. We're focusing on consistency, return of investment. And that's what you need to focus, guys. All right? It's all about consistency. And my Inner Circle Coaching Program will provide that for you. Now, here's for you. I'm going to be opening up the opportunity, once again, for the first time in 2016, to get into the Inner Circle Coaching Program. I'm going to teach you the Synergy Zone methodology. I mean, this is the key ingredient of understanding the cyclical patterns that where I identify potential reversal points on any market by using a highly probable combination of Elliott wave, Fibonacci, and price action the way that I do it, the way that it works for me by following these big guys, the sharks of the industry. It has worked over and over and over again. But you have to bring in the criteria of erasing what you already learned so you can adapt into this new methodology, right? You can adapt it on any market. Beware, depending on your trading contract chart, meaning 1 minute, I mean, come on, that's scalping. 15-minute, 1 hour, 1 hour, 4 hour are the best. You can apply this on 15 minutes. You can apply this on 30 minutes. I will teach you how to go on and create this. By the way, the last webinar that I did, I walked through the process step by step on how to create the whole thing full trade, and it was awesome. All right. I will teach you how to identify Elliott wave patterns, and the values that I'm putting right here, guys, they're not out of thin air. This is what I actually personally have paid to learn this stuff. All right, so I'm just putting the value so you have a perspective. Maybe few of you pay more, maybe of you haven't paid anything at all, but I just want you to understand the value. I just taught you the basics of the Elliott wave patterns, and that sums up in a very symptomatic approach, which is focus on the big patterns. Don't focus on the pullbacks. But on the other hand, I will teach you how to go into the bigger time frames, right? How about 4-hour charts, right, as an example, or preferably a daily chart. And what if you identify a wave 2 corrective pattern on a daily that when you switch to a 50-minute chart, right, that translates into a 100 or 200 point corrective move. Now you're bullish on a big scale bearish market. I will teach you all of that. All right. Right. So that's the key ingredient. All right. So on Elliott wave patterns, I will teach you the precise target calculations. This is key. This is just awesome. This was one of the most powerful things that I've learned how to do. I never thought that there was a way to do it using the key ingredients of price action with Fibonacci's and Elliott wave in a very systematic approach. Very powerful stuff. So the valuation, I noticed here where did I get the valuation? This is pretty much what I pay for learning this stuff. All right, Adrian, it's what I actually paid this stuff from. Okay, right? So far, this is the key factor of the methodology itself. And on the last 21 years, this is pretty much the basics of what I've invested. I have invested a little over 200 grand in 21 years in many stuff. Last year alone, I paid 30 grand on a one-on-one with one of my trading mentor, and it has transformed my trading. And for those of you following me on Trading Mission, you already see the difference of it. I'm pretty sure some of you are right here. You know the fact of how those 30 grand actually transformed the trading, because I'm trying to couple what I've learned from the big guns, right, the big guys, and apply it into short-term speculator perspective. It's difficult. It's very difficult based on the risk exposure and so on and so forth. All right. So you can see here how in 2001 I already invested in my education by then 28 grand. All right. 20. Yes, indeed, Adrian. I remember that day. Don't remember. It was awful. The 9/11. Yeah. Yeah. A few days before. It was hard. All right. So here's where you're going to be able to continue on learning. So you got the synergy zone methodology, Elliott wave patterns simplified in a way that provides the specific of what you need to learn. All right. The price target calculations. You have a total real value of $20,795, and this is how it looks when you start laying up what you're going to be learning up until this point. You're going to learn how to call price action behavior and turning points, right? I'm going to teach you one of the very powerful stuff that we call the the pulling bar technique is pretty awesome. As an example, if you take a look at the bar that actually touches the higher point right here, higher point right here, the next preceding bar that closes below of it will trigger for you the potential reversal zone, and the stop is going to be on top of the zone. Now, it doesn't work perfectly depending on the time frames that you're looking for. This is if I'm not mistaken, this is a 30-minute chart. And the other powerful thing is that when you combine that technique of the pulling bar, here's another one. This is the bar, the highest and most. The bottom of that bar will trigger the entry. That will be your sell, right? Your position to go short. Your stop is going to be above that level. The market never closed above the zone, so it's acceptable. And the market came back up, never stopped you out, and continue on the downside. And this is when it happens again, right? You can see it right here over and over again. I did the exact same thing on the downside, although the market projected and overshoot the actual reversal zone, but indeed it was a good one. And if you pay close attention to the chart right here, right? If you pay close attention to the chart, take a look at the sharp area right there. That's the reason it overshot the potential reversal zone. It was a high impact report that came up, and the volatility spiked it a little bit further down, taking stop, but indeed the market reversed as I was predicting it to. All this information, you're going to be able to calculate and do it for you. Guys, you're going to be learning how to do it. You will not need me to do this for you, right? So all of this is going to be done just up until this area right here that you're going to be learning inside the Inner Circle coaching program. The software that we're going to be including is awesome. We use it every single day, and that's pretty much one of the best investments I have ever done. And here's a look of the software. Is what we call the dashboard. Now the dashboard tells you and helps you. And believe me, I've used and I tried many of them differently. And so far, this has been the most powerful one that I've been able to crack the code and how to use it on my own. It took us about nine months.
Yep, 8 to 9 months.
Yeah, about 8 to 9 months to kind of understand what all these time frames will help us dictate in terms of the trend. So we fine-tune it, and we found a way to use it on oil and the S&P, for instance, and identify where the momentum and long-term momentum, short-term bias, and long-term bias help us dictate where we should focus our aim in trading, that trend. We already know what the trend is based on what you're going to learn, but this guy right here will immediately tell us and confirm that our analysis is correct, right? Now, this is a $1,000 value. Guess what? We're giving you a lifetime, if I'm not mistaken. Let me see if I'm not promising the wrong thing. Pete, Jimmy, are we doing the lifetime? Just let me know. I think we're doing a lifetime license to it. Guys, you will have this forever to use it at your will. And we did, here's a key. I did a live trade with the developer of the dashboard, Steve, my good friend. He's an incredible trader based on correlation. And he actually pulled off the dashboard on his end, and I pull off the chart. I did my synergy zone, my analysis, and I'm saying, okay, these are my targets. This is what I'm looking for. And he uses the dashboard and start analyzing the potential based on the correlation of the markets, and we nailed an impressive trade together. So here you see the step-by-step how to use the dashboard with the information that I'm going to be teaching you on how to predict the market movement based on price action and combine them all in once. This is a exclusive video only for the Inner Circle. I've never actually shared this anywhere else. It's exclusively for you guys. So it's right there. I'm very proud of it. It's pretty hardcore. It's pretty nice. And so you're going to get that, and that's going to give you also lifetime access to my bi-monthly live session. So every other month, there's a lot of content and a lot of information in the course itself. Is laid out on a step-by-step process. So what we do, I gather information from the new members or new students, And also, if I kind of learn something new on the next upcoming webinar, if there's something that I need to adjust or focus on and teach you how to change or adapt, I will teach it there, and you're gonna get live access to those bi-monthly live sessions, something that I do not share with anybody. Once again, because I just go my trainings, put it to work. I have my protege here and business partner Juan, and we sit down and I say, okay, this is what I learned. You go ahead and deploy it. If you got any questions, let me know. He comes back for me with the questions that he has already with his expertise. We fine tune it until we make it work. And then if it is something that it will increase the value to you guys, it's going to be included on those bi-monthly live sessions. On top of the answering the questions and live trades, I typically try to do live trades on those areas for your perspective on how to do it precisely. All right, so the total real value of all this stuff, guys, is over 30 grand. Once again, I spend pretty much, I would say, so far including the 30K, I mean over 220K in 22 years. So honestly, this is something that has been incredibly valuable for me, and I wanted to make it valuable for you. Obviously, this is not what you're going to be paying, but I just want to perceive the value as it is, honestly. I'm going to give you, which is the last training, the Market Profiler. It is a 197 value course that I have given privately to a group of investors that they were looking to trade in ETF programs or ETF instruments, and they needed to know if there is a way to create a profile. What is the best time? What is the best contract size? What is the exact time frame that they should be trading that specific instrument? How much point do they should be looking on a process of every blocks of 3 weeks, which is what they're looking to adjust their positions on their options, and so on and so forth. That training came to be so valuable that it makes me want to create the Market Profiler training program. And I pretty much, on the last free version that I did, I pretty much show everybody how to do that on those webinars. It's not going to be available anymore. Is only going to be available for the coaching programs. So that's pretty powerful, because this is the key foundation of you becoming an expert in the instruments that you're deciding to do. The total real value is so far 30K up until now on everything that I put together right there. Now, let me give you the ability to know in advance, right, where the market will turn, and where the market most likely will provide you with the possibility of reverse. How much would that be worth it to you? Would that be worth it? If it helps you minimize or even possibly eliminate the fear of losing, we talked about this earlier. How many times you move your stop loss, you get stopped out, and you were right on the trend. If what I'm going to be teaching you, what are you going to be learning, which is a knowledge forever that you're going to acquire to possibly eliminate the fear of losing every time that you take a trade, and provide with the confidence to control your emotions while you're taking the trade. Will that be worth it? The investment on you, right? How will it be worth it? If it allows you to participate in more instruments, but do not try to overcome most of them, okay? Just to make sure to become an expert on one or two, and you become an expert on those specific one or two, and that people start raving about. All right, so who is, let's just say, who is Charles? Who is Adrian? He's a very professional E-mini S&P specialist in trading. How does that sound? How much would that be worth it? You start being labeled by your peers as the expert in that industry. Let me ask you something. When you listen to the name, if you've been following for a while, Carlos, in which market did you associate my name with? Which market do you associate my name with? Or how about one? Right? Anybody? You see, it start ringing in your head, right? Oh, these guys are CLO experts. Plain and simple. Oil markets traders, right? So that's your label. What is your label? I am going to teach you and coach you to create your label, your expertise, your brand. You're going to be the perfect trader on that specific market. All right, how much would that be worth to you? Right? How much would it be worth to trade free of confusion and overwhelm from complicated indicators that most of the time contradict each other, making you lose more than win? Would that be worth it? The freedom to finally dedicate your valuable time to do whatever you really want to do with your time, right? And spending time without spending, I mean, hundreds or thousands of hours in the computer. Like for us, for example, in Trading Mission, we go in, we place a trade, and we go out, and we're done. And we have the rest of the day to enjoy our time. What it did for me, as I invested over 208,000 without counting the 30K that I chilled out last year, in my last 22 years of educating myself to reach the level of success that I wanted, and now I have in my trading arsenal. All right, so you have two choices. You can focus only. You can choose to join us or not, but I had two choices. Focus only a high-profile experienced trader, what I used to, all right, who are looking for that extra edge in their trading and are willing to invest highly in their valuable knowledge, and offer them my unique methodology and trading and coaching, right, and offer them for what it's worth, right? Or open up and help as many people who are really dedicated, honest, reliable traders who wants to become successful in their trading by providing my coaching, right, and expertise, and impart upon you the fact that you can actually pull in and predict the market with high accuracy. At the same time, I'm going to make it affordable enough for those of you serious enough in your trading, but in exchange, I will love for you if you can exchange your proof of testimonial after applying what you learned. That's a caveat here. I want you to learn, put it to action, make it work, and give us your testimonial. Would that be a fair value for everybody? All right. Is that awesome? Right? Now, what would be becoming an expert in this interview be worth to you? Okay, developing the skills. Would it be worth it? Right? It's the exact same skills that we've been doing to produce consistency in our trading, where we're able to compound our account every month, not looking to make gazillion bucks overnight, but at the end of the time, be able to grow our account and make our dreams come true by following a specific methodology that doesn't change because it's self-adapting to the market. It's based on price action in a systematic approach where we use the most powerful techniques, Elliott wave, Fibonacci, price action, and use them on our advantage and create high probability trades, knowing in advance where the market most likely will turn in our favor. That's what we've been doing over and over again. All right. So in the example that we gave earlier, that was in our client's account. That's 1,720 bucks up until that point in 10 days, right? And this is something because I know people ask me about that specific potential outcome of that account. The average is 172 bucks a day, right? I noticed here somebody said that you were looking to make 200 bucks a day, all right? But that was basically concentrating on a specific daily goal. Now, potentially, that would be a $3,400 per month average on a $25,000 account, right? That would be an average of 13% a month. Up until that point that I showed you, it was up 11% per month. But that was without compounding. Isn't that powerful? How much will it be annually? Well, I'll let you do the math on that. But can you see the potential, guys? Can you see the potential, how you can apply that? That was on my client's account. And then we took it again. We took it again and started a very small account to see if indeed we have a consistent methodology. And this is exact same system and methodology that I'm here to offer you right now. My question is, would it be worth investing in a systematic approach that provides you consistency? Yes, absolutely. Here's what Christine actually has to share with you. Thank you for changing the room up a bit. There is proof that the changes are working. I never had traded oil before, so I know what you tell me. Please see the 100% on trade report. And obviously, I mean, this doesn't mean that everybody's going to pull the exact same result, because we have losing and we got losing month and we got winning month. But up until this point, it was amazing in this week, right, for Christine, right? Danny said, this may be the hard to understand for a lot of people, but knowing what I know now, I would gladly pay $5K for this course. This course has a whole lot of meat to it, believe it. There is a lot of good courses out there, and they basically all teach the same trend following methods, but none of them teach you how to look at future prices, right? Having the knowledge, once again, knowledge is power, is to know the future area where major price action is going to occur, right? That's what we got for you guys, okay? That's what I need you to focus. Knowledge equals power over those who don't have access to it. Powerful knowledge could become success in your trading, and trading success equal more money equals freedom, and that's, of course, valuable time, and it is the most precious commodity in life that goes by and we cannot recoup, guys. If all this coaching did was give you powerful knowledge in trading and save you 20 years of testing and refining a reliable, consistent trading system, will it be worth to you? So here's the opportunity. For only $19.90 today, you're able to get the whole thing, and you're going to be the first class in 2016. And my question to you is, how are you going to look back at the end of 2016 with the brand new knowledge that you're going to acquire? All right, just go to foursidefacts.com inner-circle, tradingmission.com inner-circle. There's exclusive offers for each and every one of you out there, depending on which service you take, that it's going to blow your mind away. It's something that you might be looking for as well, but it's only going to be limited for this presentation until the next run, which I don't know when it's going to be. Only $1,990 today. Guys, this is just, I mean, come on. Once again, go back in time. All right. $160, right? A month. What do you actually spend $160 a month, right? Without getting knowledge, right? The other day I just went eating and I just spent pretty much 180 on a group of 4 people. We have fun. We had a good time, but that was all leisure and everything. If you think about it, it has no return of investment, and I did not acquire any knowledge. I had a good time, but it was money, okay. But what I'm trying to impart for you is the fact that it's nothing compared to what we spend and really help us take our trading to the next level, okay? So here's what Mike Buenos Dias just shared to us. I would say 90% of the information was new to me. Biggest revelation was on how the synergy zone was calculated. This course has given me the blueprint to finally become a full-time trading and not having to rely on a job. I would have been comfortably pay $5,000 for this course, as it provides the blueprint to trade for years and years to come. Okay, so just go to foursidefacts or tradingmission.com/inner-circle and just join us now. Right? And just let us know. Yeah, there is a mistype on this area. Yeah, thank you for noticing it, Crispin. 4 side effects with one eye. Thank you. All right, here's another testimonials that I think you're going to be, because I know you guys love this. I'm studying what you taught this last week, and it's stunning how accurate this project's resistance, support, and targets all the way to the top. Just stunningly beautiful. Knowing what I know about the market, this tells me that enough people know about this to make it work, but not enough to ruin it. Hopefully in our lifetime, this won't be public knowledge. You see, public knowledge. This is awesome. I like that comment. Aside from everything else, you have also taught me to have discipline, patience, and the confidence that this works. Yours help has been immense, and you're a great teacher. Thank you very much for that comment. Sean Swiley just said, I have been working for 5 years to learn to trade with negligible results. I came up on your training in my email and took note. 3 weeks time accomplished 2 of my goals I had for myself since 2008. 1 week with a positive gain, and the end of the month with a positive gain. I believe I can succeed with your training. This is my main reason for joining your mentorship program. I'm also looking forward to finally replacing my income with an income for trading. thank you for all the time and effort that you have devoted to help others improve, become better traders. Guys, your success is my success. I need to make sure that you really understand that what I'm trying to impart here for you is the knowledge that you're going to acquire, and you can apply it over and over. It doesn't matter what the market does, how volatile, crazy, crash, soars, it doesn't matter. You will know where most likely it will go. Profits are starting to build now as I start to understand the synergy zone and the zones. Yesterday, 75 pips. Today's 82 pips, and still one more trade to do around 2 p.m. That's an awesome. I really came together at the end of last week, so I'm remaining cautious and sticking to one contract. By the way, I keep watching the videos religiously in case I miss something. That's Anthony. Right? Guys, just go now and join us. Don't put it aside. It's the beginning of the year. And you might feel a little bit uncomfortable with this, but this is knowledge that I promise you is going to change the way that you are trading. I have poured my heart and soul on creating this training and teaching everything that I do. Is on your site right now. Do you really want to reach those goals? It's up to you. Here's another screenshot from Tom. I'm just trading small amounts, a little more each day. I went over $1,000 today. So that's pretty awesome. Nathan, I'm continually amazed when watching the market during my mentorship class at your keen sense of market direction. Many times I've been impressed with the accuracy in which you can name the price or price range to the exact reversal, sometimes to the tick. I have also watched you do this time after time live during the morning session and in the afternoon. Although I'm convinced you have a gift for reading the markets, you have helped me see it also as a skill that can be learned. There is definitely a method to the madness. All right? Anyone who's really hungry for a better understanding of the market are thinking about as they buy and sell must learn your method. I'm so very honored. I'm fortunate to have you as a mentor. Guys, this is what I want for you. I want you the best. Here's another one. I was always passionate about trading, but did not know where to properly start. After doing comparison research, I decided to jump forward side effects forecast. Carly is very experienced, helpful, professional, and more importantly, mentor eager to teach his students extremely useful stuff through excellent videos and written support. You get this impression right after joining, in this case, the Inner Circle. Obviously, by that time, we were promoting it through there. Several months later, I decided to join the Inner Circle as well. In the Inner Circle program, I have learned techniques for which I didn't even dream they existed. Markets suddenly started to move predictably with a great precision. If you want to trade the market, or if you trade but with no success, give it a chance and you will never leave. Best of luck, Joseph. Thank you very much for that, Joseph. Here's another one. It's pretty long, I know, but I'm gonna tell you one thing that I love about this one. So for what it's worth, this is really awesome. I'm not part of Carlos' crew, nor I have been, or do, however, utilize the Inner Circle and daily trade room. Now, if you're anything like me, pessimism rules when considering new fandangle, all singing and dancing, 200 winning trades in a row, $1 million a day producing trading systems. I would say the operative word here is honesty, both in what I say and Carlos himself. As for his offering, I can only speak from my personal experience. As with all trading, the proof is in the pudding. When you experience and enter the trade room, you will see the zones carefully laid out with Carlos charts. To experience those levels and zones being hit by price action is priceless. What is even more astonishing is, as Carlos goes backwards within his chart over the last week or so to explain or show something that has happened. Wow, just look at how price action bounced between those zones and had been laid out the chart as he scrolled backwards and forwards. If you can just open your mind when you're trading together inside the room, you will find far more than you budgeted for as you listen and learn along with looking and learning, right? Guys, it's all about paying it forward and teaching you the secrets of success in trading, right? and we can continue on and on and on, but you got the point up until now. It's your chance. It's your decision right now. Just join us. It's a pretty, very low cost on acquiring a knowledge, and I'm putting a price to this that costs less than the actual price of paying for a NinjaTrader license for software. So really, are you going to pay $2,000, $3,000, $5,000 on the software, but you don't know how to use it, right? So this is the key ingredient here to understand the fact that I'm giving you the keys of success by learning how to apply sense, right, into the markets by applying the correct parameters, systematic approach, and techniques that had stood the test of time. It's been years and years, guys, that I've been applying and using the exact same strategy. The other day I had a call of a guy and asking me about 7 years ago. Hey guy, he took kind of the course and then he left it hanging out in the right at half. It wasn't one-on-one coaching. And 7 years later or so, he sent me an email. Hey Carlos, I've been doing this and doing that. It's nice to see you, so on and so forth. And I said, how's your trading? Well, I lost a lot of money doing this, doing that, and I feel bad because he was paying for the course. And then he says, I started to jump from one thing to the other. I was using Bollinger Bands. I was using these other techniques and software and whatnot. And he was coming back, and the cool comment was, would it be advisable for me to take over what I left? Because the only thing that worked out for me was up until the point of the price action training that I took with you. That's when I started seeing some results. So don't jump from one thing to the other. One of the things that I wanted to share with you is be humble enough to accept the fact that by now, if you're not being successful and you've been trading for more than at least 2 years and you're not successful at trading, something's wrong. So give yourself the benefit of the doubt of investing in our information, our training, and I promise you that you are going to see the difference. I promised you to share the trading rules of my favorite trader mentor. I'm going to leave them right here so you can take the opportunity of the do's and don't of it. All right? So this is an opportunity for you to see. You can take a screenshot at it if you want to. They're pretty lengthy. But I want you to pay attention to many of the things that he says on the don't that will certainly change the way that you trade. All right? Take a look at the first don't right there. Right here. Take a look at the first one. If you don't see anything, you don't trade. You take risk only when you see an opportunity. Guys, imagine opening up your charts, clean white charts, nothing fancy about them. And imagine you're able to pull in, right, your charts, analyzing, and create a power zone, right, or a reversal zone. And you see that the market immediately already ran its course and its all-time highs. And you say, I missed the move. I missed the move. I really hope that the market, I would have bought at the bottom or whatever that is. Just picture this in your mind. Only to find yourself, when you start creating the analysis that I'm going to be teaching you, that the market is just holding because it reached a bigger time frame reversal zone. Does that make sense? And now you see the potential. You see, you're starting to think like the big fish, like the big guys. Hey, I mean, the market ran its course and it's holding in here. Of course, it is a reverse synergy zone. All I need to do now is wait patiently until they trigger a potential sell setup. and then you calculate the potential downward move and see that the market is going to move to the downside, as an example on oil, about 58 points on the corrective move out of the 84 that he moved to the upper side, just to give you a rough idea. And you say, whoa, the expectancy of the pullback of this market is over 50 and I only need 20. You know what? If I can just get 150 or 200 bucks per contract just by waiting on the precise moment to go short this market, I'm selling right at the reversal zone on the bigger time frame, and these guys need to pull back because that's what the price action always do. But also, if I start counting the waves here on the 50-minute chart, you know what? This is a third wave up. So I'm about to get started on the fourth wave down that will give me the opportunity to one or two things. Wait for the pullback so I can buy on the next upcoming run, or be a little bit more aggressive and short the market here because I know that the potential target, it's more than my personal objective, right? The target says that it's going to do over 50 points drop before continuing up, and I only need 15 of those. Guys, does this start making sense to you, right? Now, that depends on the knowledge that you put and how you apply it. How do I do it? The exact same scenario. I will sit aside on my hands, wait for the projection start coming down, and confirm everything back in trajectory of the trend. But what I'm trying to show you and picture you in your mind is the fact that with this knowledge, you can do whatever you can based on confirmation because you have a specific knowledge on how to do it, right? Does that make sense? I got a question. How about rule number 8? What it says, don't just use price stop. Use time stop. How many of you have been on the live trade room with me when you say, and you hear me say, when you hear me say, we should have been out by now? Press number 7 if you actually ever heard me, if you're witnessing or being on my trade room a couple times, when you hear me say, we should have a trade by now, we should have been out by now, the trade setup would have been by now, right? That's timetable. I'll teach all of that. Guys, believe me, when I said that I follow Mr. Jones, Mr. Tudor Jones to the T, I did. I was blessed enough not to be able to be trained by him. I was lucky enough to be on the same room on a lecture of top hedge fund manager. I was sitting on a corner listening to it, listening to the lecture, and then I was able to be trained by one of his proteges kind of thing. So one of the guys that runs some of the funds on his accounts and whatnot. All right, guys, this is it. This is the opportunity. All right, whoever is ready up until here, here's the opportunity. You have any questions? I'm here to take some questions, and this is a chance. Join us now. Don't put it aside. Come on, don't think about, hey, oh my God, this is too much money. Think about the outcome. I don't want to sound like I'm forcing it or pushing it. I just want to make sure for you to understand that we're providing you with the opportunity of a knowledge that you can apply it in any way, and it's going to be worth 10 times your decision today. Victor says, daily trade room. No, you have, if you go to the trading mission Inncer, there's an option that you can go for and locked in a special, I think a special promo that we're having for the trade room and 4 set effects for the daily trade daily trade analysis. There are options for it, but the course itself, no, it doesn't include the day trade room. Emil, the offer is good. I gotta ask my peers here, but I think it's good until, I don't know if it's today or I think on Friday. I need to ask.
It's 5 days, Carlos.
Until Friday?
Yeah,
All right.
5 days. No.
Yeah, so the opportunity is going to be until Friday, Emil. Okay, isn't that awesome, guys? Guys, you liked what you learned today so far? So I basically follow his rules of engagements, and I try to apply that into our own methodology. All right. Okay, guys, that's it for today. It's 3 o'clock, and on my side, and I think it's being an amazing opportunity. Thank you for your time. I really appreciate and value your time. I hope you learned something from what I just shared with you today. If there's anything that I can probably be able to do, that would be it in terms of showing you how to combine the multiple efforts and impart upon you the fact that you have everything that you need in order to be successful. It's who you follow and pick the right person and mentor to follow through, whether that being taking us on that ride or not. I really appreciate your time. I wish you very success in your trading endeavors, and just make sure to never quit. If you lose from time to time, that's okay. Don't be bad at it. Don't be bad at the market. Just go out, sleep it out, walk it out, eat it out, do whatever it is, and come back like nothing happened the prior day. But one thing for sure, I'm going to close with this: keep a trading journal and write down when your trade goes south and it doesn't work out. Write the reason why you think it did not work. Don't try to blame it on anybody else. You're the only one to blame, but you need to write it down and say, all right, it didn't work because of this, it didn't work because of that. And by the next time, you will not make the same mistakes. Okay? Thank you very much, guys. All right, so I hope to see you inside. God bless. Thank you very much for being here, and I'll see you on the class in the next upcoming training webinar after you digest most of it. All right. Awesome. Victor, unfortunately, no, we can't do that. That's a separate business. Has nothing to do with this. But there's an option for you on the trading on the sales page. So thank you. Cheers, guys. I'll see you inside the members area.